So, what's the one thing that really moves financial markets? It's not the spreadsheets, it's not the algorithms. Nope. It's the hidden, and let's be honest, often irrational, psychology of the people who are doing the buying and selling. We're going to break it all down. And look, this isn't some fringe idea I just cooked up. This comes from Robert Shiller, a Nobel laureate. His entire life's work basically argues that the moods, the manias, and yeah, the mistakes of the masses, that's the real engine of the market. And this idea, it changes, well, everything. So, what does that actually mean? Well, if Shiller's right, it means the stock market isn't some perfect logical calculator. No, it's way more like a giant, sprawling, emotional crowd. And what do we know about crowds? They get swept up in fads, they panic, they follow the herd right off a cliff sometimes. So the billion-dollar question is, how do you keep your head when everyone else is losing theirs? That is exactly what we're here to figure out. All right, first things first, we have to tear down the old way of thinking, this foundational myth that pretty much dominated finance for decades. On the left, you've got the old school, the efficient markets theory. This assumes everyone is a rational robot and that prices perfectly reflect all known information, instantly. But on the right, you have the new reality, behavioral finance. It sees the market for what it is. It's psychological, it's messy, it's driven by human bias, and as Schiller so perfectly puts it, it's populated by emotional blockheads. I mean, think about it. For that old theory to work, every single person in the market has to be a perfect, emotionless supercomputer, 24/7. Does that sound like any human being you've ever met? Yeah, me neither.
Okay, so now let's dig into the specific mental glitches, the hidden bugs in our brain software that make us such irrational investors.
And it's really important to get this. These biases aren't a sign of stupidity. They're not flaws. They're just mental shortcuts our brains evolved to make quick decisions. You know, they're great for figuring out what to have for lunch, but they can be absolutely disastrous when you're managing your life savings. Let's kick things off with a big one, the availability heuristic. Put simply, if you can think of it easily, your brain just assumes it's more likely to happen. The more vivid and memorable something is, the more probable it seems. To see exactly how this works, just ask yourself this simple question. Which one of these do you think most people worry about more? We're way more afraid of plane crashes, even though car crashes are statistically far, far more dangerous. And why is that? Because plane crashes are huge, dramatic news. They're vivid, they stick in our memory, they are highly available in our minds. Our sense of risk is driven by stories, not statistics. Okay, next up is confirmation bias. This might be the most dangerous bug of them all for an investor. This is our brain's deep subconscious desire to just be right. We don't really seek out the truth. We seek out evidence that proves what we already believe. Take a look at this classic logic puzzle, the Wasson test. You've got 4 cards here and a simple rule to test. Take a second. Which 2 cards do you absolutely have to flip over to test that rule? Almost everyone picks D and 3. Why? Because they're trying to confirm the rule. But the only way to truly test a theory is to try to break it. You have to flip the D to check for a 3, for sure, but you also have to flip the 7 to see if there's a D on the other side. Because if there is, you've instantly proven the rule is false. See how hard that was? Okay, but watch this. We're going to reframe the exact same logic problem. Now it's a piece of cake, right? Of course you check the person drinking beer, and you check the 16-year-old. Our brains aren't amazing at abstract logic, but they are world-class at sniffing out cheaters and rule breakers. So, these are fascinating quirks of the human mind. But what in the world do they have to do with trading? Well, everything. This is where psychology hits your portfolio and hits it hard. That availability heuristic, it's what makes us chase hot stocks that are all over the news. Remember the dot-com bubble? And confirmation bias? That's what makes us totally ignore red flags about our favorite investment. Think of the whole diamond hands thing during the GameStop craze. And the cost of this stuff is real. This is the average annual underperformance of overconfident investors who switch to online trading. They just traded more often, completely driven by bias, and they absolutely crushed their own returns. A lot of this is powered by something called the Dunning-Kruger effect, and this chart says it all.
The least competent people are often the most blind to their own incompetence. In this study, students who scored near the very bottom in the 12th percentile believed they did better than 60% of their classmates. That is pure, unadulterated overconfidence.
Okay, so it might sound like our brains are just wired to fail. But the good news is, you can fight back. You really can. Here are the practical strategies for winning this inner game. It really starts with a shift in mindset. The bias trader? They blame bad luck for losses and only look for people who agree with them. But the disciplined trader? They see every single loss as a lesson. And they actively go searching for the smartest person who disagrees with them, just to try and prove themselves wrong. So here is an actual actionable checklist for you. Before you make any trade, just pause. Step 1, name the bias. Ask yourself, is this confirmation bias talking? Step 2, argue the opposite. Force yourself to build the best case you can against your own idea. And step 3, maybe the most important, define your risk first. Know exactly where you'll get out before you ever get in. The legendary investor Howard Marks put it perfectly. The game isn't just about how much money you make. It's about how much risk you took to make it. A small, safe return can be a much bigger victory than a huge, lucky gamble. We'll end with this question for you. These principles don't just apply to the market, they apply to life. Knowing how your own mind works is the first step to making better decisions absolutely everywhere. So, what obvious belief of yours might need a second look? Thanks for tuning in.